Hello, partners. Brian Smith here. We got a PCP special and got some of the top guys in our company that have just been killing it with refinances. We want to hear some of their secrets and dive into some of the magic that they have with their clients. So I've asked Jeremy Frase from Columbus, Ohio, Noah Brader from Columbus, Brian Barrett, who's going to be joining us a little late, and then Tim Bullock from Akron, Ohio, to share some of their insights and give us maybe some details on how we can really approach the rate lock strategy, be able to lock more customers in, and really prepare to take advantage of these incredibly low rates. Now, they're all volatile. Market's going up, market's going down. How do we prepare customers? I don't think it's like the old days where you know, rates go down, you start calling customers, you just lock them. Things are moving around very rapidly. And man, where do we even start? So let's dive right into the questions. And as always, appreciate Mr. John Schwartz for preparing this PowerPoint and getting us organized. So Mr. Frase, I'd like to start with you. And again, Jeremy, Noah, Brian, and Tim, thank you so much for taking time out of your calendar to do this with us today. Well, Mr. Frase, start with you. Hey, man, there's just so many ways to start. What's your approach, Jeremy, when it comes to looking at who to call and where to prioritize, where to start? You got In the Money, you got your database, you got Encompass. Jeremy, where do you start making calls?
So In the Money, it's obviously a great resource sent to us daily. And, you know, a while back, I took my In the Money and then I recreated what I felt like was my own personal top 50 In the Money. And whenever I did that, I sorted by loan amount. And then I also make sure that I got people that have made at least 5 payments. And I know they'll be making their 6th, you know, once I reach out to them. The only reason I suggest that is I did have one case last fall where I reached out to someone, made them aware of the lower rates. They shopped me. They went with a different lender, and my commission was called back. So as a result, live and learn. I just rather be safe than sorry, and I just have an updated spreadsheet with you know, the top qualifying clients that can save the most money, and that's what I refer to whenever I'm making my calls.
Got it. So drill down real quick, Jeremy. So you take your In the Money report and your closed customer report, sorted by loan amount. You look at customers that have made at least 5 payments, and then give me some more details on the loan amount. Who are you calling first? How do you decide which ones to call first?
Whoever can save the most. And so I rely on the In the Money initially as just a ballpark estimate.
Yep.
And then, I mean, do you want me to go into detail as far as what the call looks like and what my, you know, how I'm reaching out?
Well, let's come back to that. I just want to prioritizing the list first. And that gave us some great insight there, Jeremy. So we'll come back to what the call looks like and the, you know, what we're saying. No, I'm going to come over to you. Same question. You know, you got thousands of people that you potentially could reach out to and talk to. How do you determine who you're calling first?
So I take a little bit of a different approach. I use the In the Money report, and I created a signature just, you know, within your email, and I just created a signature titled Refinance. And I would go through that In the Money, and I would pop in that signature to each one of the clients that were on that report. And the email that I put together that I saved as that signature just says, hey, rates have dropped from when you purchased. You could save a lot of money, or you could reduce your term significantly and keep your payment around the same. Let me know if you're interested. So that would be my initial email. And I would just send that to really as many people as I possibly could. And then I would get a pretty good response of people saying, yes, I'm interested. And then I would continue to work through numbers with them. So I didn't necessarily pick and choose. I didn't really sort. I just started to go through that in the money report and send out the initial kind of, are you interested email.
So no, that's a lot of brilliance there. Let's dive into it a little bit deeper. So you take the in the money report, you already drafted an email, and you save the email as a signature right in Outlook. The close line or the closing statement, let me know if you're interested, and then just wait for everyone to respond back to you.
Yeah, because pretty much everyone's interested, right? Like, who wouldn't want to at least hear the numbers? So you pique their interest. I would get almost, I don't know the percent response, but it was really high, which created a lot of work, right? So you got to be prepared to run those numbers. But I would then start to work up the numbers. So for a lot of them, we're servicing their loan. I could pull approximately what their loan amount is. I could figure out all the details. I can look up, and that's why SAM is so great. I can look up the rate pretty easily. I can figure out what they have, even not even in the money report, but I can go to SAM and kind of find some more details. I just like using the SAM system to really dig into it.
Okay.
I can see if it was a 15-year, I can see if it was a 30-year. So I would start to put those numbers together and give them an estimate. But I would say, look, this is just an estimate. We'd have to verify your credit score. So these are not official until I take an application, which I can do over the phone or online, and then I would go to that step.
Good. Now, I'm going to backtrack for 1 second. Noah, how many locks, refi locks, have you had so far for the month?
Brian, I couldn't even tell you. I should know that information.
That's all right.
But I haven't looked at the data yet for the month.
I know you had one day where you locked 12. You had another day that you locked 10. How much prep work have you actually been doing with prepping the emails, sending them out, and now you're actually locking them now? When did you start that process?
I did that last fall because around, I think, August timeframe, we had a little bit of dip in the rates from spring of last year and winter of the previous. So we had a rate drop, if you remember, around August of last year. So I'd started that work then, and it doesn't take a lot of time. And actually, I forgot to mention, I have a second signature that I use that when people then respond and say they're interested in the numbers, that signature that I saved has like, hey, enter their name. Here are two options for you to look over. Option A, you could do a 30-year fixed and you could save $150 a month or $1,800 a year or $18,000 after 10 years. Option B, you can reduce your term to 25 years and your payment will be virtually what it is right now. So you're essentially dropping off 4.5 years. So that is another signature. So if people said, yes, I'm interested, I would pull up that signature. I would calculate the figures and put in their name, and I would send them that.
Perfect. So Noah, we would like to get both of those emails from you if you'd be willing to share those with us. But one thing that I hear you saying is that your preparation with your lists and your prep work started in the fall, and you're starting to pick some of the fruit off of your work of putting these lists together back then. Do I hear you right?
Yeah, some people refinance back then because maybe they had a rate of 4.8 or 5 and they were getting 3.8. And so it was worth it to them at that time. Others, it wasn't quite enough savings for them to make a move, but I did some of the prep work back then. And now that the rates have dropped even more, now they're like, okay, yes, let's definitely do it now. So I did some work back in the fall. People didn't refinance, but with the rate drop that we've experienced recently, they're now jumping on it.
Love it. All right. I'm going to come back to you with a lot more questions. Noah, that's great insight. Mr. Barrett, you got any different approach that you take to your refis? I know you're such a strong purchase guy. You do like 240 purchases a year. But what's your approach been to these refis?
Can you hear me?
Yes.
All right. So the refis are, no one likes the refis, but we've all made, paid off a house or two with these refinances. So they're very important. I use common sense. I start with the highest loan amounts, the biggest savings. And then I just start dialing for dollars, and that's literally what it is. And the one thing that I do is I tell them, I tell every single one of them, grab a pen and a piece of paper. Here's what you're going to pay off, meaning here's what you're going to pay the bank. So if I have a $250,000 refinance, so I go, okay, you've been in the house 2 years. If you do nothing.
Brian, we lost you there. You got a bad connection?
You're going to pay back $450,000, $125,000. So the first thing I do is I do the 15-year comparison, so they automatically hear that they're going to save 6 figures. Once they hear they're saving 6 figures, the conversation's very, very easy from there. Okay, maybe they don't go to a 15-year, maybe they go to a 30-year. But at the end of the day, they definitely, those are real numbers. Those are life-changing numbers. And I explained to them that this is a life-changing moment for a lot of people. Most people are never going to own their house. And, you know, this gives them the opportunity to do what the rich people do. All right, so that's the first thing I do.
Hey, Brian.
Yeah.
Brian, let me interrupt you. I want to go back to the first part. What you were saying was absolutely brilliant, and I love your approach to it. When you say that you go after the highest loan amounts and you go after the biggest savings, are you referring to just the in-the-money list, or are you doing any other prep work and pulling reports?
Yeah, I have. Yes, the in-the-money list is great, but I had one of my assistants just basically pull, you know, anything above a 4.5 and a $200,000 loan amount. So I got, you know, 40 of those people, for instance. You know, and trust me, getting through 40, those 40 people were the easiest sell. You know what I mean? I mean, they're the ones that are saving $150,000.
Got it. Okay, Brian, I'm going to ask, you know, your approach to the 15-year and your approach to what you say. I'm going to come back to that in just a second, if you don't mind.
Yeah, and there's one other thing I wanted to mention, but you want me to mention it now or later?
Go ahead. What do you got?
So the other thing is, guys, when people don't immediately sign up, I tell them all the same thing. Someone has walked up to you on the street and given you $150,000. And if you do not take it, say, best case scenario, best case is somebody walks up to you on the street and gives you $170,000. Keeping in mind that the person that gave you the $150,000 can leave at any moment. So I don't let them hang.
Brian, I think we lost you again.
Now because you've been giving it or you're stupid.
We all love how blunt and how honest you are with people. Brian, we lost you there for connectivity, I think, for a second, but I love the approach that you're taking. We're going to dive into more of those details. Tim, how do you start? Where do you get your list, and where are you approaching clients?
Yeah, so, you know, since I started this business back in '96, I've kept the same database of my closed loans. The name of the database is 1996 through 2020 closed loan database, and I've always used that. So really, I have everything in there: name of client, address, when they bought, type of loan, interest rate, loan amount, who their realtor was, phone number, cell. I mean, I have everything in there. I've never really used technology like I probably should, you know, with Zoom and the in-the-money leads and things like that. So really, I just sort my database by interest rate and loan amount. And, you know, I'm a little different than Noah, that my average loan amount, you know, is probably 120 to 130 to 140 range. So it's a little bit harder for our clients when they're only borrowing 100 to 125,000 to refinance unless they can save 1% to 1.5% on their loans. So I have less of a list that are saving $100 a month. So combination of both of those, the in-the-money leads that helped a lot, but then mainly using my database. And then what we did was we drafted an email, sent that out, did a mail merge through Word and through Excel. And then immediately the next day we did a voice broadcast to that entire database. And, you know, the email was probably similar to what Noah does with, you know, you can save $100 a month or whatever. And then the voice broadcast was, hey, just want to make sure that you received my email yesterday about interest rates. If you're really interested in doing this, what I would love for you to do is send me your most recent mortgage statement. And then I put it back on them that if they're really interested, they're going to send me their mortgage statement. And then that's where we really started running the numbers for clients.
So Tim, you said several things. I want to make sure that I got it right. And I think that you got a lot of great keys. First of all, you've been putting a database together for years. You sorted your list by loan amount and by rate. You're looking for customers that are saving at least $100 a month. You put together a mail merge through Word and Excel with your message, sent that out along with a voice broadcast. What are you using? Slide broadcast or something like that, Tim?
Yeah, slide broadcast.
So you send out a slide broadcast and you're asking the clients to send in their mortgage statement so they have some skin in the game and take steps forward. Is that right?
Yeah, I'm not really willing to make phone calls or talk to people until they show some interaction with us. I don't want to work that hard. Maybe I'm lazy, but
No, so not at all. But so I like your approach with the emails and a little bit of technology. Noah, a lot of emails too. Brian, pick up the phone and start dialing. Jeremy, are you doing a little bit of pre-work or are you just picking up the phone and dialing?
No, I mean, I know in the money is kind of my reference point. In the money and the rate and the loan amount. So that's about it.
So then is your initial contact with the customer through technology or just picking up the phone and calling?
I don't have a set rhyme or reason. It depends if I remember the client, how well I have a rapport with them. But a lot of times I text or call. I'm just not a huge emailer. Yeah, that's about it. Text or call.
Yep. So different approaches, but all can be effective. But looking for a response. I think that's great. So let's dive into the second question then. So now if we do have that customer on the line, how do you explain the opportunity? Brian, you started to get into this a little bit more. I'm going to hold off and let's start this one with Noah and then we'll go in the same order. But Noah, how do you explain the opportunity to your customers and your VIPs? What, email to the rest of the start here before they say yes?
Well, it's sort of changed a little bit just depending on, last fall to right now. I mean, right now I'm telling them, rates are at like 50-year lows. That in the last 15 years of me doing this business, I think the rates have been lower maybe once. So I'm trying to, if I get them on the phone, I mean, a guy called in yesterday. It was actually a referral from one of my best agents. It's her brother-in-law. And he called me. He's like, yeah, I'm just kind of shopping on rates, just trying to figure out, some details. Not sure what I want to do yet. I think I want to pay off my first and second, roll it into one. And so I'm on the phone with him talking this through. And I was like, hey, look, now's a perfect time. With my experience last week, the rates can go up in 10 minutes. So I'm going to hop off the phone. I'm going to email you a rate quote and like a breakdown of what the payment would be based on a credit score of 770. If that's what you're telling me you think it is, based on this value. And I'm going to email that to you like within 5 minutes. So I emailed it over to him. He picked up the phone and called me right back. He's like, wow, that's so good. He's like, let's just lock it in. So I went from a guy that's just like, hey, I'm getting rate quotes to I try to create some urgency because it's true, like rates can move and they can never come back down. So right now, that's how my phone conversations are going. Because everyone asks, like, was it going to go lower? It's like, there's a better chance that it's going to go up. And that's what I'm telling people. Yes, it could go lower, but there's a better chance, a higher percent chance, in my opinion, that it's going to go up. I can't predict it. I don't know for sure, but that's just my opinion. So,
love the way you're doing that, Noah. Creating your urgency and fear of loss jumps in there, and a little bit of a takeaway close, right? A little bit of a takeaway close. So you put it out there in an email and let the customer know that could be taken away at any second. So I love that. I love that approach. Any other details there that you want to share?
No, it's just real, right? I mean, I'm doing that because it's a reality. It could be gone in 10 minutes and it could never come back down. So that is, to me, like, I'm pretty adamant about that because I've experienced it within the last week where I'm talking to 6 people. I give them a quote, I set up the file and the rate's gone. and I got to call them back. So I'm just giving them that personal experience that just happened with some people last week. And it's like, it is creating that urgency, but it's all true and it's all real.
Yep, that's good. So, Brian, same question. How are you explaining this? You started to get into taking their current mortgage and comparing it to a 15-year. What's your explanation?
All right. So one of the things that the refinance boom does that really shocks me is that it gives you practice on numbers. And with your calculator, you can't, when I'm calling everybody. So number one, I'm calling. Number two, when I call them, I have their existing numbers handy. And number three, a lot of times I won't get them. So I'll immediately follow up with a text. And the text is, and you have to be able to do this quickly. You have to be able to do it by hand. And it allows you to do all sorts of calculations when you're able to determine mortgage insurance, principal and interest, monthly savings. I mean, literally your calculator should be on fire. And so, at the end of the day, I send a text real simple if they don't pick up, hey, $400,000. If we refinance, that's a $250,000 savings. Wow, call me as soon as possible. So that's how I'm basically getting in touch.
Love it, Brian. You cut out again. Where are you at? Are you on vacation?
No, I'm in my basement.
You're in your basement. You're in your bunker. You're in your bunker. So I love it. You're making a ton of well, you got the prep work up front. You got the existing stuff handy, and then you're doing a lot of calculations on the fly there. Are you using Mortgage Coach at all yet, or just doing it all by hand?
I do it by hand, and the reason, and again, I'm shocked, but if you're on this call and you cannot do it by hand, then you need to learn how to do this by hand immediately.
I like that, Brian. I'd like to even get into some of the calculations that you run, but for time's sake, we're gonna move on. But maybe we could even do another scenario like that. Timmer, how do you explain it? How do you explain the start of this?
So really, I just start asking the questions. What is your primary goal? It's going to start with them. Are you more interested in cutting years and thousands off of your loan, or are you want to save monthly? And that's really just the first question. Then the conversation goes from there. And then if they say, well, we'd like to do both, I said, well, that's going to be difficult to do, but I think a 15-year right now is probably going to make more sense based on the differential interest rates and the thousands that you're going to save over the life of your loan. Let me crunch some numbers for you. And then I'll just really do that quick. Similar to Brian, I don't spend a lot of time. I'll take their balance, I'll add $5,000 to it, and then I'll just plug it into Encompass, either in a file that I created for them or just a dummy file for 180 months at 3.375. I'll have a pretty good idea from their old 1003 what their taxes and insurance were. So I don't spend a lot of time. It's maybe 5-minute conversation with them on the phone. And then similar to Noah, I'll send them a quote. And then I don't create the urgency like Noah is. I'm going to start doing that today because I think that's where I've fallen short with these 50 to 60 refinances that I haven't taken that I should have taken. But so that's really how my conversation goes with the clients.
Tim, what I love that you're doing their goals, finding out, asking a handful of questions to get their goals, but then I love that you're giving them advice and letting them know what to do, because, the majority of people just don't, and they're looking for a strong leader. So great approach. Mr. Frase, coming over to you. What's your approach when you get one of these clients on the phone?
Yeah, I try to keep it short and sweet until they commit to either letting me duplicate their current application if I have access to it, or they commit to completing a new application. I'm just taking a balance, adding $4 or $5 grand, comparing the new P&I to the current P&I and PMI if applicable. And I'll say, look, one option is you can save around this much. Another option is, and I'll figure out a 15 or 20 year, and you can reduce your term, and this would be your ballpark payment. I'll take a quick second, explain to them how volatile the market is, and the reality is I can give them a much better, detailed explanation once they give me their blessing to duplicate their application, obtain a new credit report, or they complete an application. And just leave it at that.
I love the simplicity, Mr. Frase. You know, doing too much and overly complicating this, I think is the wrong step. I think keeping it simple, like you're saying, all you guys are saying the same thing there, but keeping it simple and not overwhelming people with details or numbers, totally love that. So let's go to the next question here. When do you actually pull credit, take a fresh 1003, and lock the rate? Brian, we'll start with you on this one.
Lock the rate?
So when are you actually taking a fresh 1003, pulling credit and locking rate?
Oh, no, until they commit. Yeah, they got to, is that what you're asking? When do we do it? Yeah, when they commit.
When they commit. So you give the details. They could go to a 15-year and save $150,000. Then you're going right to an app. I got a part B question, but you're going right in at that point. What if the market isn't there yet for them to actually have big savings?
I mean, I don't make the call unless the market's there.
Okay. All right. So that'll be a separate question. So you already know before you're making the call that they qualify, and then you're going right in. Are you taking the app, or is your assistant who's doing it?
No. So no, I don't know that they qualify at this point. Once they've committed, then I'm assuming that, you know, I mean, I've gotten burned, but I don't have, like I said, for me, it's all about speed. So I don't have, you know, I'm assuming that their credit's still good, that they still work. You know what I mean? Once they've committed to the numbers, then we do the app. During the app process, I may find out that they're no good anymore. Probably happens. But I'm not going to pre-approve somebody. I'm not going to pre-approve somebody who's going to, you know, maybe do a refinance.
Okay, that's good. Tim, when are you updating the application pull credit?
So I have been starting a new application. So I pull up their old 1003, either start a new one with just their name and address and all that. And then once they, I'm starting to ask right now, hey, is it okay to run your credit report? So I make sure that I'm quoting you accurately interest rates and loan amounts and things like that. So I'm starting to ask them to let me run their credit. If they give me the okay, then we start right then and there. And then, you know, right now I've got a watch list of, I think 50 right now is on our list right now of certain interest rates. So I'm going to have to go through each of these and start new files so that when the rate does come back down, and it may be there today, I don't know, that we can get them locked in right away. But I'm going to get a commitment from them that if an interest rate gets to this level, 3.25, 3.375, or I can save you $125 a month, do I have your okay to run your credit and lock you in? So that's what I'm going to start doing this week.
Yeah, and Tim, I think this is a problem here, and this is a point that I wanted to get to in this conversation, is that if we don't do enough of the prep work and then we try to call them and get the process started once the market hits, we're too late, right?
Yeah.
We're chasing something that's disappearing, almost like trying to hold sand in our hands. We got to do the prep work, make the calls, take the 1003s, and update the credit even up front. Jeremy, how are you doing that in the process? At what point are you getting 1003s and refreshing credit reports?
Well, I wouldn't be reaching out if that wasn't the the objective. So, you know, you're not. I mean it nice, but unless you're willing to let me get her done and either duplicate that app or you complete it. I mean, I got plenty of other people standing in line, and it's a blessing that I'm taking the time to reach out to you. There's a lot of lenders and banks that have cut off refis altogether, and this is a historical opportunity to take advantage of, significant savings. So let's dance.
Okay, and yep, if they're ready to move forward, then you are. If not, so
call me back.
No, I'm gonna back this question up. Let's say that it's last Friday when rates went all the way up to 4.5. Are you still calling clients and prepping them? And how does that look when rates, rates just went down right before we did this call, right? So now all of a sudden a bunch of people actually can lock in, but let's say they can't. Are you still calling and prepping?
Yeah, for sure. It kind of pisses me off when I miss the opportunity. So because of that, from everything I was hearing going back to last Friday, that we'll potentially see another rate drop, which we have this week. So what I was doing is, in the midst of being angry that I missed the opportunity for a bunch of people, I had my assistant start up the file for them. A lot of times we have, if they purchased within the last year and a half or so, we have their stuff in the previous file. So I'm not pulling credit or anything yet, but I am duplicating that. I'm setting it up. I'm getting it ready to the point where I can pick up the phone and they say yes, and then I can pull credit, update their income and where they work if anything's changed, and lock the rate. So we're talking maybe like 10 minutes of work, maybe less, versus if I have to start from scratch, it could be 30 minutes to an hour, I guess, potentially. Yeah. And kind of like what Tim was saying, like I do tee it up with a lot of people to say, hey, if this gets to 3.25, are you okay if I lock you in? And most people are like, yeah, absolutely. So I did that with a lot of clients from last week and locked them in this week.
I love that. I love that. So no, I love to hear all the prep work that you're doing with the list and then getting the application started and getting people ready to lock in. And I like that commitment. They're giving you a rate lock commitment so that, hey, if this window closes, there's another window that's going to be coming open. Do I have your permission to lock in now? I think that's really solid. That's good. Brian, well, we'll come back. Let's see. We started with you on that one. Timber, let's go over to you on this one. How do you approach a customer that doesn't want to lock yet? Let's just say that you're watching the market. They come in. They say they don't want to lock yet. What are you doing?
Well, I'm explaining to them, I know the market just as much as they know the market. And if they're fooling themselves, if they believe that they think rates are going to come down any further, then I go into the historical lows of all time. 25 years in the business, I've seen them in the 8s, I've seen them in the low 3s, and this is about as low as we've ever seen them. So I'm creating that urgency, just like Noah was talking about. But ultimately, if they still think they're smarter than the market, I'll let them know, what interest rate do you want? And I'll keep an eye out. And if they ever get there, I'll be back in touch with you, and we leave it like that.
Okay, I like it. Mr. Frase, you contacted a customer, you pull credit, you got a 1003, and then all of a sudden they slam on the brakes. What are you doing?
Saying, hey, no worries, I understand. We all look at savings differently, as I mentioned previously, there's a lot of clients that are looking to take advantage of these lower rates. I don't ever want to pressure you. The best way to reach me is going to be via text. Just understand that our market's very fluid and volatile, and it could totally change an hour from now. But I will always do my best to respond to you whenever you are comfortable with proceeding.
I like it. So you're doing a lot of communication through text, that speed of text and the quick communication. You're all about that.
Absolutely. I just can't keep up with the emails, and I discourage people. I tell everybody, if you're looking for anything urgent, best way to reach me is via text. The reality is it changes by the hour, and just try to be respectful, not push them. And do my best to set as appropriate expectations as possible in our market.
Yep, I like it. I like it a lot, Jeremy. So the speed of technology, of texting there. Noah, what about you? You got somebody prepped, everything is ready to go, and then all of a sudden they say, well, no, it's 3.25 is a good rate, but I think it could go lower.
Yeah, I mean, I just take the approach of being 100% honest. Last fall, the rates weren't as volatile. So, if I said, hey, your rate could be 3.75, right now you're at 4.75, I go over the savings, and if they say, yeah, I'm not sure, I'm going to wait, I would say, you know what, that's no problem. It's been pretty steady at 3.75 for the last couple weeks. So if it ticks down, I'll let you know. If there's any change up or down, I'll keep you informed. If you change your mind, let me know. That was my conversation back then, which was, That's how the market was at that time.
Yep.
Today, that's not my conversation. Like, my conversation now is no problem. You can wait. It's the lowest that I've ever seen it in a very long time. 10 minutes from now, it could be 4.75 because that has happened within the last couple weeks. So just want to let you know that that's how the market is right now. But right at this moment in time, the rate is this. And if you want to take advantage of that, let me know. And I also say too is once we lock, you're locked. You're secured. If the rates go to 4.75 or wherever they go up, you're secured with the rate that we locked in. We'll have plenty of time to go over all the details. I'm locking this thing in for 60 days. We got plenty of time to go through all the details of the refinance, how much it's going to cost, all that stuff. But I can't guarantee your savings until we lock. So are you okay if I secure your lock now, and then we'll have the next week to go over all the details? And usually with that kind of message, they want to go ahead and lock in.
Your focus on securing in the security of being locked in, I like that. I like the urgency again of the market going up. Now we have proof, right? We've been through this a couple times now, and the window is open, then it closes. So you can actually give those experiences, and you are giving them those experiences, Noah, of, I had a guy just like yourself last week. We waited and then we lost it. Now it's back. I think we should take advantage. I like your approach there. Brian, last one on this question. What's your approach with a customer that says, hold on, I don't know if I want to lock yet?
Yeah, mine's real good. I locked a customer in 3 weeks ago at 2.625. She called the next day and said her dad told her that rates were going lower. I had her get her dad on the phone. I gave him the old, you've been given free money, you're going to say no, and just to hope get a little bit more free. I made him confirm that he wanted me to unlock his daughter's loan, and I unlocked it. And rates nowhere near that now, and hopefully dad will be writing a check for the difference. And I called her about a week later and said to her, hey, just so you know, the difference between that day and this day is about $8,000. What do you want to do? And she's still, my dad says, I said, so I tell everybody that story immediately. And that's how I get to convince most of them to lock. I tell people nobody knows where rates are going. If they did, they would not be talking to you. They'd be on a beach somewhere. You got free money. If you don't take it, good luck.
Free money. Free money is a great explanation. Why miss out on the free money? And you got a loss situation as a simple example to help customers not do the same thing. So I like it, Brian. Let's see. We're coming back over to the beginning, Mr. Frase. You got any of these customers? You've already locked them, loans in process, and then somebody tells them that rates have gone lower. I want a lower rate. You got any of these yet, Jeremy?
Knock on wood, I haven't had. I've had some of them, but nobody's bailed on me. I did have one client that just chose to make a horrible financial decision and withdraw after having locked in at 3.375. But whenever people bring it up, I'm spending more time now more than ever with explaining the significance of locking a rate versus floating. And I just let them know, we're setting aside X amount of money with your name on it at a guaranteed rate for a fixed period of time. It protects you whether rates go up or down. If rates go up, I'm not going to call you and renege on it. And if they go down, it is what it is. But you just got to go into it with the mindset that, once again, you're blessed to be able to take advantage of some of the lowest rates in the history of mortgages. I personally refinanced. I closed a month ago. I got 3.5. Did I time the bottom of the market? No. But I'm just thankful I got what I got.
Great explanation. Love the the gratitude. Perfect approach. Noah? You got anybody?
Can you repeat the question?
Yeah, man. So you got anybody that you locked in? They're in process, and Noah, I heard that the rates went lower. Can we get lower?
Yeah, I've had that situation. but I try to, and I just try to just tell them, like, look, it's slightly better, you know, maybe an eighth or something like that. And you got to wait 30 days for it to expire. Like, I just go through the process of relocking, and you just, you know, you don't know where the market's going to be in 30 days. If we cancel everything out, it could go up. I had one person that actually closed. She signed, and it was during the rescission period. She was texting the title company and me, thinking about possibly withdrawing because she thought the rates were going to get lower. And I just told her, hey, look, you're at 3.5. Today's 3.375. That's a difference of $17 a month. You know, and I just try to just be honest with her again. Like, it's slightly lower, but we're talking $17 a month. So to start over, all over again, and redo this whole thing. And just after hearing that and just answering her questions, she closed and left it as is. So again, I just try to give them the information. If they want to make the decision to unlock and not go forward and wait, then that's on them. They can lose out, kind of like Brian was talking about, losing out on that free money. Like, it's possible the rates can swing. Even from you canceling this out and calling another company, like, they could swing in 10 minutes. So I don't know. Like, I've had some people that have walked away, but most people stay with me.
Taking the time to unpack it and really understand what they're asking is what I hear you saying. That I think that's brilliance. Brian?
Yeah, and I'll tell you what, too, like, for them, just real quick, like, to start over, to start over either with me or to start over with another company, like, they've probably closed with us. They're comfortable with us. They trust us. They trust me. They trust what I'm saying. I'm giving them the answers that are real. If you do that, sometimes people are just like, all right, you're right, let's just close. So I've had several of those recently where that's happened. Yes, they could probably save a little bit, but we just went through 30 days of getting the refinance done, and it's done. And they're going to start over with somebody else, and most of these companies are taking 60 to 90 days to close. And so I hit them with those facts of going somewhere else and starting this whole thing up again. And you might need an appraisal. We got a property waiver. You might need an appraisal. I just make it sound like it could be a long process to get this done somewhere else.
Yeah.
Because it's true.
Yeah, that's good. That's good. Nobody wants to start over. Brian, have you had any customers like this that have called you up? Hey, Brian, we got this. I think I heard it's lower now.
Yeah, so when you get those calls, you have to recognize that the buyers who thinks they're doing their due diligence. And so, you know, obviously, you know, what everybody said, Noah said, be honest, but at the same time, give them what they want. Say, hey, so you want a lower rate. That's not a problem. In order to get a lower rate, instead of borrowing $180,000, you got to borrow $181. Your payment's going to go down by, you know, $8. You're welcome to it. You know, I don't recommend it. I recommend we stay the course as we're in really good shape here. You know, but yes, you can have a lower rate. It isn't going to be free. And typically at that point, they're going to get off the phone and thank you for your time. I mean, they just want to be heard. They just want to make sure that you aren't stealing from them. You know, that there's this special thing. But I will tell everybody, yeah, let everybody know that when they're locked, they're locked. If rates go down, and Noah said it best, and I think Jeremy did too, and Tim, if they go up, we are protecting you. But if they go down, you're locked. And we do have a policy to relock your rate, but we would have to unlock it. We're back on the market. We got to wait 30 days. That's a bad idea, isn't it? And they all say, yeah, I don't want to do that. Then once they get through their due diligence, and you can give them a lower rate. You just have to charge them, you know, points.
Yeah. I like that analogy, Brian. It's a test. They're testing you to see if you're just going to say, oh, yeah, go with the lower rate. It's a test, and letting them know that there's additional cost in place, or unlocking and relocking. Yeah, all very well said by all you guys. Timmer, have you had any of these guys yet?
Not really, because I try to have that conversation up front. Hey, I'm going to give you an option right now. You know, if you want to float your interest rate, I can't even turn your loan in, number one. But if we lock you in, you're locked in. If they go up, you're protected on the upside. Chances are there's more room to go up than go down, But if they do go down, we really can't do anything because you're locked in. You can't have the best of both worlds is what I tell them. So I very rarely have clients that'll come back to us because of that conversation up front.
Yeah, be proactive, have it up front, solve the problem before it becomes one. So guys, this conversation, incredibly valuable. I want to go around one more time and just see if there's any final thoughts or words of advice that you would give to any of our loan officers in the company that are watching or listening to this. Well, Noah, I'll start with you on this one. Any final tips for loan officers that might be struggling to get customers locked in and closed? And again, for locking, you guys are all locking 25, 35, 45, 50 deals this month, which just blows my mind. But any final tips for any loan officers that might be struggling with this?
I would say just be proactive and create some urgency with your entire list. I personally recommend reaching out to everybody, like I said, with those signatures on the email just to pique their interest. Some people will jump on it right now. Some people will be 3 months from now, but you can at least start the process and get them going. So just be proactive and just do a little bit every day. If you want to wake up and for an hour, just send out 30 emails and get the process going. Just do a little bit every day and you'll start to see some locks come in.
Great advice, Noah. Thanks again for making the time. Mr. Barrett?
Yeah, I mean, guys, that's in addition to it being semi-free money for the borrower, it's semi-free money for us. Take this money, pay off your car, pay off your house, whatever it is you can pay off. This only comes around every couple of years, and we've been very fortunate. We've had an upswing, then a downswing, and then a big downswing. So a lot of people are double dipping on some of these. It's a blessing, but you got the other thing, don't let them bog down your pipeline. Get them in, get them out as fast as you can.
Giver's gain, Brian. We can make a lot of difference in people's lives right now, and it comes back to us when we give. And a lot of people are looking for advice. So this is that's a great tip. Mr. Bullock?
Yeah, so I love what Noah had said earlier. I wrote that down, that he tells his clients, hey, I want you to give me the okay to lock you in. We'll talk numbers later. He never even gets into closing cost or prepaids or how much they're raising the loan amount. It's like, hey, we're going to lock you in right now, and we'll talk the numbers later, but I have to lock you in right away. I love that. I'm going to start using that. No, I appreciate you saying that. But ultimately, we're here to serve our clients. They don't know what the market is doing. So the preempt goes back to us as their mortgage professional, that we have to be engaged with them. I don't do a good enough job doing that because I tend to be lazy at times, and I really want to focus on the purchase business. But ultimately, you said it, Brian, giver's gain. We need to be interacting with our past clients. However, if it's phone calls, if it's emails, if it's text, if it's videos, if it's a voicemail drop, whatever the case is, we have to be engaged with them, giving them the options and ultimately, not just our past clients, but anybody else that we can think of. How about our financial advisors, our CPAs that we work with, and the realtors and their clients? I think we need to be engaged with them as well.
Unlimited opportunities, Tim. It all starts off with the guys with the highest rates and the highest loan amounts, but there literally is an opportunity with everybody we come in contact with. So, Mr. Frase, why don't you bring us home? Final tips for our partners.
Sure thing. I would just say, a couple things. For me, I got to be in the right mindset to pound out the refis. And so I will time block. And when that time comes around, if I'm not in it, I'm not gonna go through the motions. I'm gonna wait until I am in it. And I'm a different bird, as you guys know. But when I'm in it, I'm 100% focused, and I'm big on educating the consumer. But for my refi calls, I'm very much to the point, and I'm giving them little tidbits. Like, for example, last week in a period of 2 hours, we saw interest rates increase by 0.75%. In 20 years, I've never seen that happen in a month, let alone 2 hours. I'm creating the urgency, and if they don't like the savings, I'll specifically ask them, is there a particular rate or savings you're looking for? And assuming they've completed an application or they've given me blessing to duplicate their application, I will add them to what I call my rate drop list. If they don't complete an application, they're not going on my rate drop list. That's for serious people only. And I have a sticky on my computer with everybody's names. And if they are looking for a particular rate, I reference that. And I let them know if and when rates drop, I will call you. It's going to be a very short conversation. I'm just going to be looking for your blessing. You now know everything you need to know. I'm just going to want to know if you want to lock your rate or not. If you don't, that's fine. But, you know, just understand, like I say, this doesn't come around often. And I'm very passionate about providing excellent service. And I just want to give everybody an equal opportunity to take advantage of the savings that are out there. And, you know, what I need to personally get better at is getting myself in that mood to make more of those calls. I have no doubt. I don't know if I could do 10 in a day, but Noah's definitely giving me something to shoot for. But I promise you, one day this week, I'm going to have 7 or 8 of them, and you'll see it. And it's just being confident in what you're offering, understanding, seizing the moment, and knowing this. We know this rarely comes around, and who knows how long it's going to last. And prioritizing based on loan amount, we're all paid on volume. It's easier to show savings with bigger loans than it is smaller loans. Just seizing the moment.
Love it, Jeremy. Love it. Mindset, time block, be focused, pound the phones, put people on a rate drop list. All amazing tips. So I think the world of you guys. I sit back and watch in amazement at all that you're doing, and just encourage everybody to that's listening to this to get your game plan, get your approach, figure out how you can get your list ready to go. Be proactive to prep files, and then send out the messages to let people know that you're going to be calling them and how they can get in contact with you. Simple systems and a little prep work up front can make a huge difference. So guys, thanks again for helping your partners. Means the world to me, means the world to them. You guys are rock stars. Keep killing it. And partners, let's go out and do the same. Make it a great day, everybody.